with the book and with the delta. That's what transition is. You've transitioned from a buy delta to a sell book, and it stayed a sell book. That's the transition. A little bit more of a buy coming in on the buy side of the book here, so you can see that for yourself. A little bit of a tick divergence you might have fancied for a pop at some business in that reversal off of that 32.5. I certainly took a little buy trade against that. I took some 33s long. It's just traded 35s. Worst case, stop at break even. Miguel, the yellow on the Ninja Trader is the same as the stacking and pulling, yep. It's looking at the change in the order book, not looking at the actual size of the order book. It's looking at the change in the order book, which effectively is, you know, what this is looking at. This is what this 25 and 15 and 200 and 300 is, right? It's the change in that order book. It's not the order book. It's the actual size of the change in the order book coming in at that point. And obviously, if you see you can't have a minus 200 contracts on the limit order book, right? It's impossible. You can't have 200 minus. So how the hell can we get a minus number in these columns? Because it's people pulling away their offers, which obviously causes a migration in terms of the order flow. And that migration becomes that sell off or buy phase that you then take advantage of. So you're just basically trading the transitions. That's all it is, Miguel. But it doesn't have to be, this one doesn't have to be bigger than that one. It's better if it is. But what it does have to be doing is changing in line with that one, right? It has to be changing at the right time. So the sooner you can see that transition, the earlier you can be in the trade. But obviously, if it keeps changing back to a very big macro storyline, that obviously becomes a little bit blatantly obvious that there's no way this is ever going to go higher, which seemed to keep happening to the buyers, didn't it? We kept getting a 600 sell offer, and then we went negative on the bid, and that obviously gave you a bit of a strong macro clue that there was just simply no opportunity to take the S&P higher through those balance areas, and that's why when we bought it, we simply bought it and cleared, bought it and cleared, bought it and cleared, bought it and cleared, and then we jumped into a sell trade when the offer was obvious at the low edges, and we got a massive six-figure winner as the price squeezed south. So, you know, we've made our money on that trade for sure. But this is the point. I mean, into a bottom edge, you would imagine that this should go positive on the bid with a big negative on the offer, right? At a bottom edge. But when you come into a bottom edge and it's still massively offered, you're still expecting that squeeze. So you get ready for the squeeze south, don't you? That's how you see the BSG squeeze. As they pull away bids at the bottom edges, the BSG becomes more possible, more probable, and it doesn't matter. So you're in the sell trade and you're getting the squeeze on. And obviously, if it then squeezes, you watch to see the sells vanishing, you watch to see the transition on the bid, and you basically take up the flip. So you basically pick up the flip trade off of that trade transition. It's a lot to take in, Miguel. It's a lot to take in. I'm not saying it isn't, but when you take it in and you're fast enough, you make some pretty, very, very fast, quick, easy, clean trade decisions. You can see there's still a heavy sell in here. Heavy sell in here. So that makes life difficult for that buy trade to come back in. The ticks went very bullish. So obviously, if you're going to take that as a buy trade, you're certainly not going to cross the spread to get it, right? You're never going to cross the spread to get that tick. And that just allows you to make that easy read, doesn't it? Yeah. So you see the bid coming back in. So obviously when that bid came back in at the same time as the tick went bullish, it meant you could easily buy into a bottom edge and start taking the trade bullish, right? So you saw the tie-in between those two pieces of the jigsaw puzzle, right? So I took a quick screenshot just to show you the trade. There it is there. So the tick went bullish. All of a sudden the tick went bullish. So obviously when the tick goes bullish, you're now looking for the book to fill in behind this tick. Okay, so at that stage, the book was still bearish through this phase here. As soon as the book went bullish, now's the chance to cross into the trade. You're not paying top edges up here. You're paying into this trade here. You're trying to get into this trade here. You're trying to capture the book going bullish, and then you take a little tick in line with the book, and you make some easy money again. Another easy stop at break even. Crazy how it's possible, but if you work on it, if you practice it, it really is possible. You could buy as many bottom edges as you like and you'll still not lose money. And sell as many top edges as you like and you won't lose money so long as you get good at it. But if it flips, you know you're at a bottom edge, you know the pressure's back on you, and you can see that big sell coming in again, big sell coming in for the squeeze lower, then you know exactly what you're going to be doing. Not buying a bottom edge. Make sense? Makes a lot of sense, doesn't it? Makes a lot of sense.